weekend, all. Ira Epstein of Linn Associates with your weekend edition of the Financial Market Wrap-Up, and this is for Friday, March 15th, 2019. Now remember, I do the weekend edition a little different. We'll start with the monthly chart, and then we'll go to just weekly charts. Second thing, what I'd like to do is catch up on things. The stock market is trying its darn best to break out to the upside. It got a good piece of news today where the People's Congress of China ended, and they are passing laws that are stopping forced transfer of American intellectual property, and they're opening themselves up, at least according to the law that they're passing, to foreign ownership of business interests. That's very, very important. Now, how do we monitor it will probably be the last part of the puzzle. Because we're already at March 15th, the odds of putting together President Trump and Premier Xi at the end of March, it could happen, but it's more likely to be in April. But the market is starting to digest all of this information. In plain English, we're getting closer to a deal. Now, another thing I'm starting to do, I did for this week our first report where I take a market segment and I'll do a video special report rather than writing a long, drawn-out piece. I think, number one, you like it better. I think it's easier for me to do. I cover the seasonals. I can cover very shortly. I'll probably put in price counts, the weekly charts, the daily charts. Look for more of these. We finished the first one now, and I'm going to be able to knock these off in really nice succession as time goes on, and I'll do them on different markets on a regular basis. How you'll get to them is I'll mention them here. You'll be able to go to the website, go into it, put in your name, your email address, your phone number, and away you go. You don't want to do that? Don't look at the report. It's really that simple. So, where are we now? When I take a look at the E-mini S&P 500 index, the market is staying with a bullish bias on a monthly basis. I consider bias to be this: the relationship of close to the 18-month moving average. If it's over it, I have bullish bias. If it's under it, bearish bias. And that's kept me in pretty good stead. If you look at the market from 2016, it got over that. You had this one correction, and I don't think that's so bad. It happened on December 31st, 2018. Gee, the market lost its bullish bias there. Wasn't that the crash time going into Christmas Eve? Then the market came right on back at the end of January, and it's kept that bullish bias. Not bad if you look at how the market's done. If we take a look at the weekly charts, the bias turned bullish right here. And again, that bias turned up this week. Not here. It stayed under it from all this time frame. Yeah, the market wasn't making new highs. It was in a corrective mode. It got itself back into a bullish bias on February 1st. Not bad. And it's kept itself in that theory that I have on it since then. Okay. When we take a look at a weekly chart, you can see we're not back at the all-time highs. The market bottomed out Christmas Eve, has come back in a very dramatic fashion. You know, for the year, the market's up 12% or so. For some people, that's enough of a gain. Understand that that is what you're dealing with. You're dealing with how do you keep adding to that and add the gains to get up to a 20% gain for the year. I'm not saying it can't be done. That is what the market is fighting. When we take a look at the current pattern on a weekly basis, you're in an uptrend. You've got the higher lows, the higher highs of the market. What we had last week was an outside week down, and you took that high out at the end of this week. That is a bear trap. I define it as that when you take out the high of an outside week, until you take out last week's lows, the odds favor the market looking to go to the closest of a Bollinger Band or a key moving average that's above the market, if they're there. They don't have to be there. The moving averages aren't there. You got the 100-week average and you got the 18 in red, both under you. So what could be above the market? What's there is the upper Bollinger Band. So I've got in play as a market technician, throw the name of the chart off. Until you take out that low, the odds favor that the market could make a run at the upper Bollinger Band. When I take a look at momentum, it's bullish. In the weekly charts, I don't look at overbought, oversold. I simply look at the slow stochastic momentum oscillator is pointing up or down. it's up. When the market's over the 18-week average, that's how I determine bias, it's up. And certainly the pattern of higher lows and higher highs puts that up. So I have everything still very much in a bull trend. When I take a look on the weekly chart, it's the same pattern. Higher lows, higher highs. You had an outside week down, you took out the high. I've got in play that 73.51 Bollinger Band top. As I look at it, I'd be wrong in my analysis if last week's low was taken out. In the Dow Jones, did we have an outside week? No. That's the first thing. What you have is you have a pattern of higher lows, higher highs. I can live with that until you take out 25,213. The momentum is up. The trend is up as defined like that. Obviously, the resistance is a bit higher. We know Boeing was a problem this week. There's talk, too, that Boeing could have a software release, not as some people are talking in months. I read one report today that said they're 10 days away. What a difference that would be. That doesn't mean those planes would automatically come off the ground. They're going to have to prove to the government what this did. And I'm talking governments, I should say that, around the world. But just mentioning it. Okay, 26,238, take that out, the upper Bollinger Band becomes important. What would throw this market into losing all that? Get under 25,213, you'd end up with lower highs, lower lows, putting into play the 24,767 level. In the Russell, you still have the pattern here of higher lows, higher, right, you got them, higher highs. You're over the 18-week average. Momentum's up. What would hurt this market? Take out the 15, 12, 60 level. You could end up with lower highs, lower lows, putting the market play back down to the 18-week average. So we're getting some definitions that are good. Now on the VIX weekly chart, you still have momentum pointing to the downside. I can tell you that on the daily chart, you went down to the lower Bollinger Band, and often that is a zone where the put writers, I've noticed this, come into the market looking for a bounce back on the daily charts to the 18-day moving average of closes. We'll see if that works, but I saw them come into that play. Lower highs, lower lows, fighting for support against this, what, the 100-week average. If it gives ground, maybe the 945 area comes into play. Momentum is down there. In the 10-year note, you had a rally today that got up to 122.26, capping the week out. So now you've got a higher high, lower low. It's amazing, but interest rates are just locked in here in the 10 years in a very low 2.6, 2.65 zone, back and forth. If you get a further rally, 123.15, the upper Bollinger Band could be a target. You're fighting resistance right here. You've been doing it all the way along for the past weeks at the 100-week average. Momentum still pointing up, not a trend. You got the lower low, higher high. In TLT, similar to the futures, you've got the higher high, lower low. What this market did is it proved its course. It came down to the 18-week average, what I call a line in the sand on a weekly chart, fought its battle, back up now to the resistance of the 100-week. Should these markets get a push to the upside, away you go here. Remember, you have the FOMC meeting coming out this week. So I don't know that you're going to do an awful lot one way or the other in front of that until we see what Chairman Powell has to say. In the dollar index on the weekly chart, first off, you're caught in this sideways band. That's the most important thing. You've been here, done this on this resistance point, and you're unable to break through so far. If the market were to get under 95.71.5 on the weekly chart, you would lose your way in the bullish trend. You'd also take away the bullish bias you've had since the past 2 weeks as you're over the 18-week average of closes. So far, resistance, that upper Bollinger Band, very formidable, and this market hasn't appeared to want to break out of that. In the euro currency, I keep looking for this market to come alive. I think it needs Mr. Draghi to do something, because the trend is down. Resistance, 113.98. You'd have to take out 114.36.5 to negate the trend, but you are in a basically sideways market, a little bit of a bend to it, but you're starting to get divergence. The momentum is acting like it wants to bounce in the market, yet the bias is staying down. In the British pound, once you got over the 18-week average, you've kept the uptrend intact in the market. You're still in one. You'd have to take out this week's low to break that. The bias is still pointing up. You are at key resistance, the upper Bollinger Band. I'd be a little careful right there. The market finished at 132.85. That number's 133.06, and that's where I think the pros were taking money off the table, between the 100-week average and that number. In the Canadian dollar, it is still in a bear trend, as defined on the weekly charts, with lower highs, lower lows. Resistance is the 18-week average. You'd have to get over this last high, which was 76.30, to break that. Momentum has flattened, but still downside momentum evident in the chart. Japanese yen, while the daily charts are looking one way, the weekly chart is still quite bearish. It's got lower highs, lower lows, two levels of resistance, 90.34 to 90.49. That's the 18-week and the 100-week. I'd look for pros to put in resistance there. You'd have to get over 90.76 to negate this. In Bitcoin, what flat action? Now, the CBOE, the Chicago Board Options Exchange, I think threw in the towel. I think they said today that their contract doesn't work. They have no real volume in it. The Merc has won the deal on that. I don't know what the Merc's won. You're only doing 2,000, 2,500 contracts a day. That's not very big. You do that in a minute or two in bonds. No, it's just giving you ideas there. But in looking at it, the market's got a problem right here. It's at the 18-week average of closes and momentum coming in. Has this market bottomed out, is what the market is really asking itself. In terms of the Brent, we've got lower highs, lower lows, and the switch happened today where the weekly charts closed under that 18-week average as you're narrowing in the difference between the two. And you would not think that's happening as the U.S. is producing more oil, and we keep hearing that OPEC and Russia, they're doing okay. But what's happened is they're not really, how do I say this? Their production numbers, the big drop in production, isn't as big in the month of February as it was in January. And as we're looking at this, you can see the 100-week average has become the support here. Momentum is up, trend up. If this market gets under 64.01, you could be back at that 18-week average before you know what's going on. In WTI crude, you're fighting the resistance at the 100-week average. Now, let me show the difference. Support in the Brent is that number. Resistance, and I hit the wrong button there, is the 100. So coming up in WTI, falling back in Brent, trend up in this market. If it can clear this and do it in a meaningful way, you could be going to the 60-20 level, the upper Bollinger Band. Rebob gasoline, I think, is a little bit ahead of itself, and I'm friendly on this chart. You've got higher lows, higher highs, but you're over the 18-week average. You're over the upper Bollinger Band and the 100-week. We'll see if the market wants to pull back and get under that this week. Hard to tell. In nat gas, this is the last chart, still bearish on the longer-term chart. Lower highs, lower lows. To negate the downtrend, you have to get right over 2 weeks ago high, which is 290.80, and momentum is still locked into the downside, bias down, trend down. So still bearish. You know, if you're like me, one of the things that I know I went through, and you probably go through it, when I began my career, and I still have the problem, I want to go ask somebody, you know, here's what I'm seeing on this chart. What do you think? Unfortunately today, the offices, everything's electronic. There aren't a lot of people to talk to. I'm lucky I'm in an office of professional brokers that have years, decades of experience, and we'll throw ideas around and we knock on each other. You don't have that ability typically. You know, most of your friends aren't trading futures. It's you, it's on your own. And even if you trade stocks, you probably go, oh, I'm going to talk charts with these people. Well, I've come up with something that I think helps with that. In the morning, I record a video. It's over 40 charts. I'm now including ETFs and gradually going to add more of those. And I talk chart action. And if you like what I'm doing here, the difference is I'm unbridled. Because you need a user ID and password to watch this, I can say, buy here, sell there, this is what I think you should be doing. I can throw out my ideas. You're not part of the general public at that time. You're into my fold as my subscriber. Now you're going to say it costs a fortune. Okay, if you think 26 cents a day to try this is a lot for 30 days, you're right. You should not try it, and don't. it's too much for you. But if you think that it could offer an idea, you're on the fence post, what does he think? Maybe that's worth something. So how do you do it? Go to our website over the weekend, click on Research or Education, go down to Morning Subscriber Video, click on it, read about it, and away you go. I think you'll find that it's worth your time and effort. I know I love doing it, and I think that I'm putting 5 decades into something you probably aren't getting from a lot of other people. With that, I'm Ira Epstein. You have a great weekend, and I'll talk to you all Monday.